Hey everyone, it's Luron here and welcome back to my channel. Guys, in today's video I want to talk about the market crash. Lately I've been getting a lot of questions and everyone is asking, Luron, is it time to sell my portfolio with this market crash that's taking place in January? And in this video I want to answer that particular question. Now, it depends on when you purchase your stocks. That will determine when you'll sell, whether you sell or not. So in this video, I'll be breaking down the Nasdaq 100, the S&P 500, and the Dow Jones Industrial Average. I'll show you guys those three main indices, and you'll be able to make a decision after this video as to what is the most prudent thing to do with the current market crash that's taking place. So without further ado, guys, we'll jump right into it. One thing before I jump into it, guys, if you're new to the channel, remember to subscribe, smash that like button. It helps with the algorithm. So I'll give you guys a couple of seconds so you can smash that like button and also subscribe if you're new. I'm waiting and we'll get started. Perfect. Let's get started, guys. So let's jump right into it, guys. We'll start off first with the Nasdaq 100. Guys, a lot of people make trading more difficult than it actually is. You look at this chart here, guys, and what you see here, this was the crash back in 2020 March, February to March, and you see the market pull back significantly here, 30% on the Nasdaq 100. Look here, guys. The market, if you understand the Dow theory, you'll understand that the market is in an uptrend when it's making higher highs and higher lows. Let's look, for example, here, guys. The market is going up, down. So we have a higher high from this level. That's a higher high, higher lows, higher lows, higher lows, higher lows, higher lows. This pullback here, guys, look what's going on here. This was the last lower high. The market has broken that lower high recently here, as you can see. This is the level we're looking at right here. And the market broke that level. So that's an indication to me that the market is about to go into a downtrend, not an uptrend. The uptrend, like I showed you before, simply the Dow theory, it was making all the higher lows all the time. It wasn't coming back down below any of those lows. This time around, it has broken that low. If you look at the SPX, it did the same thing here in the S&P 500, but the only thing is we don't have any real body candlestick that is broken. We have a tail that has broken this last low, but it's still a break, guys. You know, whether you have the real body has more significance to it when it has broken a lower low with a real body of the candle. But this is still a break of this low, guys. So what this market will try to do, and then let's look at the Dow Jones. So the Dow Jones, the same thing, guys. We broke those levels there prior. So my suspicion about this market is that this market is about to go into a downtrend. If not a downtrend, it could probably move sideways, but more so a downtrend. But it wouldn't just go down as you may think it'll go down. The market will try to rally. It'll try to stage a rally. So you can expect a bounce on this market because we had a sharp sell-off in the past couple of weeks. You can expect a push back up to some levels. And then once we push back up, this is the SPY, by the way. So I have some key levels marked here. On the SPY, we're looking at that 450, 449, 450 level for this market to push back. Now we're in pre-market. It's January 26th, and we're in the pre-market 7 o'clock. And the market isn't open as yet. But as you can see, the market is gapping up here right now because we have some big players reporting earnings today. I think we have Apple, Tesla, Microsoft, some of the big names. So those are pushing the market up a little bit. We also have the Federal Reserve meeting today, which will help the market to determine the direction. I know the big thing right now for that Federal Reserve meeting is the rate announcement, whether the Feds will actually hike the interest rates, because inflation is through the roof right now, guys, and everyone is asking. No, Wall Street wants that interest rate to go up, and they believe that will help with bringing down inflation. So we'll see what they do today, and that will help guide some direction in the market. So like I said, this market will push back into this 449 level. That's my suspicion. And once we push back in that 449 level, that will be a key level for you to watch. If this market breaks through this level, sit and makes this level now support, because right now it will be resistance. If it goes up there and make it a support, the market could probably go retest all-time highs again. But that's not the option that I'm thinking that is about to take place. I'm thinking this market will get rejected here, and we can see this market work itself back down. There's some critical gaps to be filled. If you look here, guys, on the SPY, we have a gap here at 401 to be filled. That was created back in April of 2021. We also have another small gap here at 411 that needs to be filled. We can see the market come down and fill that gap as well. So guys, like I said, it's not complicated. A lot of people follow the news and they get all worked up with what the news, all these financial news is telling them, and they're panicking. Now let's go to the question that I mentioned in the beginning of this video as to whether you should sell your portfolio or not. Guys, if you bought your stock back in 2020 and you're buying all the way here and the market's all at the top, now you should be taking some profits, unless you're just some type of Warren Buffett guy where you just want to buy and hold like forever. You can keep holding, because the S&P 500, the Dow Jones, they'll keep going up over the years. 5-10 years, they'll keep pushing higher. The trend is always higher for these markets. Now, if you're more of a short-term investor like myself, I got in 2020 at different levels. Now, the key stocks that I've bought last year and the year before, I'm not selling right now, although the market is pulling down. That's for my long-term portfolio, by the way. Now, for short-term, I'm not buying up at these levels. A lot of people bought stocks when the market is all the way up here. Now, if the market is pushing down here, you might want to sell. You might want to sell and reposition yourself to get back in once the market crashes fully and start to make some move back to the upside. Now, I did a video a couple of days ago showing you the stocks that you should be looking to purchase right now. I think let me check that quickly, show you guys. But some of the stock I talked about was Roku. This is down 67%. That's the stock you want to buy right now. Now, this doesn't have much more downside to it. If the market crashes even further, maybe a 10% more, this can go lower. But this is a deal right now. I showed you guys Baba. This Chinese stock was beaten down as well, almost 60+%. That's the stock you want to buy. Coop, the stock is beaten down 60+%. That's the stock you want to buy. PayPal, that's the stock you want to purchase at these levels. So those are some of the plays you want to take. Not your Apple, not your Tesla, not your Microsoft, none of those stock I would want to touch right now, because those are the stocks that are bringing down the market. That's the first thing right now. And those are the stocks that have a long way to go lower before they start moving back higher. So I'll wrap things up here, guys. In a nutshell, if you purchase at the top, you might want to sell as this market bounces a little in the next couple of days after the rate announcement by the Feds. I think it will be a good time to get out if you got in at the top, and just give the market a chance to consolidate, pull back, and then you might want to reconsider entering once the market is down. But yes, but if you got in earlier, like I said, last year and the year before, then there's no panic. There's no panic to sell, because most likely you're a long-term investor. That's your long-term portfolio, your 401k, or RRSP if you're in Canada. And there's no rush to get out, guys, because the market is just, correcting itself. From a big run, we have correction. If you look at the entire market, we go big runs, correction, big runs, correction. So there's no need to be panicking right now. The only time you want to panic is if you bought at extremely high levels. That's the time you want to probably get out and reposition to get back in maybe in another month or two. So that's it for this video, guys. I'll wrap things up. Hope you guys got some benefit from this video. If I did earn your thumbs up, remember to smash that like button. Also, if you're new to the channel, remember to subscribe. So take care, guys.